Hello, hello, hello. Welcome back to the show. Hope you all are having a great day today. We are live. All right. Turn my mic down. Welcome back to the blockchain and cryptocurrency show. Today is Thursday, October 24th, 2019. Hope you're having a wonderful day today. As always, I do have a great show for you today. Some of the articles that I'll be discussing with you all are Libra's congressional hearing. Bitcoin maybe is a partial store of value, says Nouriel Roubini or Dr. Doom. And the 18th million Bitcoin have been mined. And remember, there's only 21 million Bitcoin. So those and more articles we'll be discussing today on the show. Also remember, as you come in, please hit that like button. We really do appreciate it. Also comment and subscribe, hit the notification bell. And with that said, and without further ado, and without stalling also, let's jump right into it. First topic is Libra U.S. congressional hearing, recap of where Zuckerberg faces Senate. So Mark Zuckerberg decided to sit before Congress and Senate regarding the Libra cryptocurrency. Now, I've seen snippets of what happened yesterday when he sat before Congress, and it was inconsistent in terms of the congressmen and women asking him about Facebook, questions about Facebook. It was more of, well, I wouldn't say it was more of, but it was a mix between that and the Cambridge Analytica thing. It felt like a continuation of that and other things that was off topic. Now, albeit I understand that they were trying to set a picture or paint a picture before they asked him about Libra, but it didn't come off as clear, and it was okay. Granted, yes, Cambridge Analytica was a big scandal. Yes, understood. Yes, punishment is well deserved. Yes, but at the same, on the other hand, it was more of, man, that was last year. You all still asking that. If you all wanted him to ask some more, y'all could have just brought him back in. Hey, come on back in here. Hey, I'm pushing this right here. It's the BET browser. Every time you click this, you get some BET tokens. So I'm going to push those things. Now, the article today, October 23rd, Facebook CEO Mark Zuckerberg will testify which was yesterday, before the United States House of Representatives Financial Services Committee regarding Libra, the company's stablecoin project that has been facing major regulatory backlash since the day it was announced. And that right there is absolutely true. While Libra was previously represented in front of U.S. lawmakers by the head of the coin's native Libra crypto wallet, David Marcus, this will be the first time Zuckerberg himself will represent the project in Congress. So, could the Facebook CEO have any tricks up his sleeve, and how beneficial will such a hearing be for Libra? And then this is the timeline of what happened. Brief recap. I'll just read this brief recap. We don't really need to dive up into hour by hour highlights. But Libra, a stablecoin-like asset that will ostensibly be backed by several national currencies, was officially unveiled on June 18 when Facebook published its white paper. The project has a focus on facilitating cross-border transactions while seeking to target the unbanked population, which accounts for around 1.7 billion adults across the globe. Specifically, the social media giant is planning to distribute Libra tokens through Calibra, a digital wallet that will be integrated into Messenger and WhatsApp. Um, Facebook owns Messenger, which means that's their Facebook Messenger, and they own WhatsApp. Therefore, exposing the cryptocurrency to a multi-billion audience. Calibra is being developed by the eponymous Facebook-owned company. However, the wallet CEO, David Marcus, has stated that his project is expected to become just one of many competing digital wallets available to customers, given that Libra is an open source platform. Further, the project will be governed by the so-called Libra Association, a nonprofit Switzerland-based consortium comprised of companies willing to invest a minimum of $10 million each. Now, I saw an article that stated that none of the remaining companies have invested $10 million so far. So it's a non-binding contract that they signed. The Libra announcement was met with instant regulatory backlash across the globe on the same day the white paper was released. And if you go back in our archive, me and Ulysses, we went over the announcement. I read the white paper on my channel, for With Money, but link is in the description. But we went over the announcement of when it came out, and a few articles also. Representative Maxine Waters, chair of the House Financial Services Committee, called for Facebook to halt the development given the company's troubled past. So, scroll down a little bit more. Yeah, he still has to meet with the Senate tomorrow, I believe. So he's gonna, of course, he's gonna, say, hey, we're gonna do this, we're gonna be doing that. We're willing. Obviously, they said a few times that they are willing to work with the governments across the world to get this thing launched. But we'll see. I still think it's gonna launch. I'm on record of saying that, and I'm on record of saying that I think it will launch. What's the word I'm looking for? It'll launch, but it'll launch um, different. Well, it'll be changed, because they'll play ball. All right. Report faith. Now, this is what I'm talking about. This is example, good example of what I'm talking about, of it being launched, but it'll be launched differently. Un momento. Report. Oh, excuse me. Microphone. Facebook could use fiat pegged stablecoins for Libra. Facebook is reportedly open to the idea of using national currency pegged stablecoins for its forthcoming Libra project. Now, with that said, I also read a report of a congressperson, or someone trying to pass a bill to say stablecoins are securities. Now, obviously, that is so transparent that the reason they're doing that is because of Facebook. That they're thinking about the idea of using national currencies pegged stablecoins for its forthcoming Libra project. According to Reuters, on October 20, David Marcus, the head of the Libra project for Facebook and CEO of Facebook's wallet service Calibra, said that Libra could use various fiat-based stablecoins instead of the initially proposed token. Speaking at a banking seminar on Sunday, Marcus reportedly stated that the main goal of the project was to create a more efficient payment system, and that it was not opposed to looking at alternative approaches. Marcus said, and I do quotes, "We could do it differently," he said. "Instead of having a synthetic unit, we could have a series of stablecoins, a dollar stablecoin, a euro stablecoin, a sterling pound stablecoin, etc." So that's the example. We could definitely approach this with having a multitude of stablecoins that represent national currencies in a tokenized digital form. That is one of the options that should be considered, in quotes. The originally proposed backing for the Libra token was a basket of various national currencies, including the US dollar, euro, Japanese yen, British pound, and Singaporean dollar. So it was going to have those initial 5 basket of currencies that it'll be back to. Now, this is what I'm talking about when I say that I think it's going to launch, but it'll change. This is a prime example of this article. Facebook could use fiat pegged stablecoins for Libra. in order to pacify governments' fears of what Facebook is doing. That's what I'm talking about. They're going to try things. They're going to continue to try things to get it launched. I personally think it's going to launch. That's just me, and I think that they're going to play play hardball to get this thing launched. And I still think they're going to launch it. All right, let's get to some Dr. Doom news. Nouriel Roubini, he is notorious. How you doing, CR Frank? How you doing today? Hoping for another dump. Yeah, you know who I look at, CR? What's his name? Alessio Rastani. I'm gonna show you his YouTube page. He's a trader. Well, he's a technical analyst guy. Alessio Rastani, where he's at. He did he did something good on the charts. Alessio. This is who I follow when he's charting on Bitcoin. This guy right here, Alessio Rastani. He did a video about Bitcoin, and right here he talked about it in a few other videos. And he talked about, because Bitcoin was touching a support line, it kept touching it, and he said, and he was talking about the more it touches and bounces off that support line, the more likelihood it'll break it. And he was talking about it, and this was the third time it touched it, and he was saying like, hey, this is the third time it tested that support line. Next time it come down, it's going to break it. Now remember, before it broke it this time, it went up to, let's check the charts. It went up to 8,400, and then it got rejected, and then it came back down to that support line and just broke it. Now I'm looking forward to you. You talking about you looking for another dump? Hey, brother, I'm with you. I'm with you. We can buy the bags together. I think it's going. It's been this, the crypto market cap has been teetering above that $200 billion mark. So let's look at this chart real quick. Let's do like a 90-day. So yeah, it was like touching a support line. It was like touch, bounce, 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 bounce. It just went down. And because see this little rectangle right here, it was trading into the, I think because it came down. This was the first bounce. Then right here was the second bounce. It was like a support line because the wick off the candlestick. I feel like bringing up trading view because his joint was more cleaner than mine. What I'm trying to say, the wick off this right here was touched the support line. Off these two touched the support line. Then it bounced again for the third time. Then bounce. It just went through the floor. So yeah, I follow him for my big for this one of the guys I follow for my Bitcoin trading, to learn and how to do everything. Tone Vase is cool. I like Tone Vase. At first I didn't like Tone Vase. I was with everybody else. I couldn't stand Tone Vase, man. But everybody's saying Tone Vase, he don't like Bitcoin. And I'm like, how can you say that? He's all about Bitcoin. He is pro Bitcoin. Forget literally everything else. And he said that's all he deal with is Bitcoin. But he just tells it like it is. He said, he don't think it's going up anytime soon. He wanted to go up. He says he wanted to go up, but he just not get it's going up anytime soon. So yeah. I want to say hello to Jay Charles. How you doing today? If Bitcoin, Tyson says, if Bitcoin breaks 7,200, pull the parachute. Hey, go to Alessio's. He talks about. He said if it breaks that, he can see it go down to like the next support. He pulled the Fibonacci down. It was like at 6 something. If it breaks that, so we'll see, man. Hey, it go to 5K. I don't know, man. This may be the last time I go to 5K if it go with 5K. Anthony Long says, "What's going on, BBT? How you doing today?" Ty City says XRP is climbing in BTC. Jay Green says, "What is Zuckerberg? Was it Zuckerberg at the hearing or the Google News that's killing BTC right now?" No, it's just the charts, man. And it's just the charts. It ain't Zuckerberg. And then everybody always talk about Bitcoin all the time. So a lot of times, what you see when you look at crypto news, everybody got a excuse why the crypto market going on. It's like it's 101 excuses out there, man. I just learned to follow the charts, to be honest. Hey, Ty City, this morning on my show, you say you live in the DFW around there, and just type your thoughts about Bitmain going to what's that, Rockdale near Austin, building the the mining down there. So yeah, let's get back to our article. Bitcoin may be a partial store of value, concedes Nouriel Roubini. Now, Nouriel, I'm clicking on this. I'm gonna get my bat up. You know what I mean? So Nouriel Roubini is a well-known Bitcoin bear. He man, he put it like this. He don't rock with Bitcoin. Economist Nouriel Roubini, also known as Dr. Known for his prediction of the 2007 to 2008 financial crisis and his criticism of cryptocurrencies, has conceded that Bitcoin is a partial store of value. Roubini made the concession during a panel alongside high-profile crypto industry figures such as Brock Pierce, Bobby Lee, and Tone Vays during the CC Forum 2019 conference in London on October 16. As Tom Vey suggests in a tweet on October 17, Roubini's admission arguably represents baby steps forward in his stance toward cryptocurrencies, notwithstanding the fact that Roubini swiftly followed his comment with several criticisms. Quote, wow, excuse me. Maybe Bitcoin is a partial store of value, but it's not a unit of account. It's not a means of payment. It's not scalable. In spite of its rally earlier this year, it's lost 60% in value since its peak. So I don't see it going anywhere, frankly. End quote. I take the US dollar over any one of your S coins, he told BTCC founder Bobby Lee, arguing that financial innovation, albeit imminent, would instead come from implementations of AI, big data, and IoT technologies in the fintech space. Roubini noted that as an analyst of financial crises, he is not a defender of the traditional financial system. He nonetheless forcibly argued that central banks' responses to 2008, such as coordinated monetary policy and the Fed assuming the roles of lender of last resort, had worked and prevented the Great Recession from becoming a Great Depression 2.0. So he's coming around. I agree with Tom Vay's baby steps. He'll get there. It may not be BTC, it may be XRP, but he'll get there. And just think about that. A decade, this has been literally a decade of growth. From 2010, the next decade is in what? 2 months? So from 2010 to 2020, it's just been a decade of growth. And we've averaged what? Market correction every decade since 1850. Well, in this country, at least, I would say that. So that's remarkable. Bank of England governor says world needs rebalancing away from U.S. dollar hegemony. Bank of England Governor Mark Carney says part of the bank's mission in addition to ensuring monetary and financial stability, is to enable innovation and empower competition. Speaking on Wednesday in Washington, D.C. at the IMF annual conference on big tech and the future of finance, Carney reflected on the dilemma that regulators are having to face with respect to fintech and blockchain innovators who are rapidly reinventing the payment industry as cryptocurrency platforms, stablecoins, and even Facebook's scorned Libra project stand up to intense scrutiny, pressure, and blowback. The benefits are outweighing the old ways of doing business, forcing traditional players to imagine a world where open source systems and alternative models thrive. Now, Mark Carney, he speaks good about Facebook's Libra. He speaks good about it. Says Carney, and I do quotes, how do you set up platforms that are open source, that lean against the natural network externalities and lock in effects that we get to in tech as a whole, and that can enable competition? And it could be competition amongst wallet providers in the payment landscape, end quote. I'll just read this. Carney notes that a key goal in generating more options in the financial services industry, where small and medium enterprises have a 22 billion, where small and medium enterprises have a 22 billion pound SME funding gap. He believes the UK will establish an architecture for small and medium enterprises, or SMEs, that are seeking competitive financing. Such a system would empower SMEs by enabling them to own their own assets and financial data, and then taking that data to a bank or a fintech or a big tech firm as they shop for the best deal. So basically, what he's saying that we need more options. The dollar hegemony is stifling a lot of innovation, because after a while, we're on the forefront of like more broad innovation in the world. And having what he's saying is, and per him, saying is having us still being on dollar hegemony is stifling that in a way. So yeah, but he's pro. The way he speaks, you will seem like he's pro Libra. The way he speaks, it seems like he's pro Libra. All right, now this is interesting. The 18th million Bitcoin to be mined this Friday. So it was last week Friday. So the 18th million Bitcoin has been mined. Only 3 million left. 3 million Bitcoin left. Now the last Bitcoin is due to be mined 120 years from now. So in 2140, the last Bitcoin will be mined. So the 18th million Bitcoin is expected to be mined this Friday. American investor and co-founder of investment firm Morgan Greek Digital Assets, Anthony Pompliano, tweeted on October 15. Pompliano also noted that at this point, there are only 3 million BTC left to be mined. The tweet asks to raise awareness about the world's most well-known cryptocurrency. Quote, this Friday or last Friday, the 18th million Bitcoin will be mined. There are only 3 million left. Let's make this hashtag trend so the world can learn about Bitcoin, end quote. This initiative is not surprising from Pompliano, given that he said on CNBC's Squawk Box that over half of his net worth is in Bitcoin in August. I remember that because I forgot the guy's name. He was saying, how can he was on the guy that I'm talking about. He was on Shark Tank. Un momento. And he was like, how can wow, excuse me. What was that? Golly, what was that? He was like, how can you have your net worth be in Bitcoin, blah, blah, blah. And Anthony Pompliano, he shot back. He was like, well, he said something to the effect of, isn't your entire network in crypto? No, in regular stocks. And he was like, yeah. He said, well, all your investments in one basket. And he was like, well, I'm diversified. Yeah, he was like, yeah, but you diversified in stocks. So he made a point, but he did surprise a lot of people when he said half of his net worth is in Bitcoin. reading on. What he hints at is that so far, 17,997,150 Bitcoin have been mined. So have been mined. Excuse me, I didn't mean to do it in your ear. According to Bitcoin data website, Bitcoin block half. I'll click on that soon. And the upper limit for how many BTCs there will ever be hard coded in the system is 21 million. So there only ever be 21 million Bitcoin left. So let's look at this website and let's bring up our trusty calculator. You know we got to have that calculator. So I'm gonna sit this. I'm gonna sit through this with you. So days until Bitcoin block reward halving countdown. 201 days. That leaves us to about estimated ETA estimated date of May 13th. The reason estimated is because even though in the code there's a block forged to Bitcoin's blockchain every 10 minutes, that 10 minutes is not always exactly 10 minutes. Sometimes it'll be 7 minutes, sometimes it'll be 11 minutes, sometimes it'll be 8 minutes, sometimes it'll be 9 minutes, sometimes it's not always 10 minutes. But every time a block is forged, the algorithm adjusts the difficulty level in order to get as close to 10 minutes as possible. So that's why it says reward drop ETA May 13th. All the articles are left down in the description. So if you go to the article or go to this website tomorrow, it'll say something different. So tomorrow it'll say, it may not say May 13th, 2020 at what's this? 11:27, And I'm pretty sure someone on YouTube will be having, hope it's me, a countdown of when the next Bitcoin block happens. Will be, you gotta get them views up, and watch time up. The Bitcoin block mining reward halves every 210,000 blocks. So every 210,000 blocks is equivalent to about 4 years. Every 210,000 blocks, the coin reward will decrease from currently is at 12.5 Bitcoin to 6.25 coins. That's half. It'll decrease by half. Then every 4 years from there, it'll decrease by half. So when I said that the last Bitcoin would be mined around 2140, obviously you're like, well, it's 3 million left. 18 million has been mined already. The coin is only 10 years old, and you're telling me the last 3 million will take another 120 years to be mined. The reason is because the emission level, the amount that's coming out, will steady drop and drop and drop and drop and drop, thereby decreasing that bottleneck smaller and smaller and smaller of how many Bitcoin can get through. So total Bitcoins in circulation is about 18 million. We know that's not correct. Well, that's technically correct, but a couple million have been lost already, like lost indefinitely. Total Bitcoins ever to be produced, I'm on the second line here. Total Bitcoin ever to be produced is 21 million is hard coded into the code. Percentage of total Bitcoin mined. So far, percentage if we divide 18,011,400 by 21, we'll get 85.77. So let's do that now. So it's 18, 0, 11. I want to touch my screen. 400 divided by 21 million. Do. So yeah, 18, move to 0, 18.70. Okay, hold on. What are numbers at? 85.7. It's 85.76, but the 8 makes the 6 or 7. So yeah. Where we at? So the next one is total Bitcoin left to be mined, 2,988,600. I'm going to type this into the calculator after I read the rest of this, because it's going to change towards the end of the show, because Like I said, every 10 minutes, you know, close to 10 minutes, another block will be mined. So it'll decrease by, depending on how long the show takes, but it'll decrease by 12.5 every so often. So every 10 minutes, I'm trying to say. Total Bitcoins left to be mined until next block. So until about May 13, 2020, about 363,600 Bitcoin will be mined until the next block reward halving. Bitcoin price is $7,481.97. Market capitalization. So if you multiply how they're coming up with market capitalization is they're multiplying 18 million 11,400 by the current Bitcoin price. I'm pretty sure. So let's do that. 18,044. No, that's 11,400 times 7,481.97. Yep, 134,760,500. There's some discrepancies at the end, but those this thousand is, you know, whatever. It's that price is not perfect. It's going to fluctuate. No, crypto is volatile. Bitcoin is generated per day, so if it's every 10 blocks, every 10 minutes a block is formed. So we know there's 10 10-minute blocks per hour, right? So no. What I say is 6. What was I thinking about? There's 6 10-minute blocks per hour. So we're gonna 24 hours in a day, 24 times 6 is 144. There's 12.5 Bitcoin pushed out per 10 minutes. So 144 times 12.5 is 1,800. So Bitcoin is generated per day. Bitcoin inflation rate per annum, meaning annually the number of Bitcoins being pushed out is 3.72%. So how do you get 3.7? What calculation did they come up to get 3.72%? Let's divide 1,800 divided by 21 million. Pretty sure. Nah, that's not right. 3.72%. Or did they divide? They divided something because they get a percentage multiply. I got to sit on that. So Bitcoin inflation rate per annum at the next block half. So 3.72 divided by 2, you know, it's going to be 180 because it's going to go from 12.5 to 6.25. Where we at? So Bitcoin inflation rate per day, 1,800 times the current price. That price is going to fluctuate. So 1,800 Bitcoin being produced every day. So we multiply by the current price. We should get as close to that number because, as you know, Bitcoin is volatile and the price goes up. I'm pretty sure the price went up 27 times already. So 13,467,546. So yeah. $13 million of Bitcoin is being released today. Bitcoin inflation until next Bitcoin. Wait, Bitcoin inflation until next block half event based on current price. Bitcoin inflation until 2 billion. So what they did was they multiplied. Okay, they multiplied the total Bitcoin left to be mined by this. They multiplied these two numbers, and we should get 2 billion. We should get that number. So let's multiply 363,600 by 748,197, and we should get about 2 billion. Yeah, wait, that's not 2 billion. Yes, it is. 2,720,000,000 444,292, and it is 2,720,445,051. So yeah, that's about right. I gotta move my calculator. There we go. So yeah, that's about right. So yeah, this number, yeah, because what they did, they multiplied the amount of Bitcoin left to be mined by the current price. So this price is highlighted in blue is always going to fluctuate because the current price is not constant; it's dynamic. Total blocks left to be mined. Wait, no. Total blocks is there's 600,912 blocks on the Bitcoin blockchain. Because the Bitcoin block mining reward has every 210,000 blocks, so it have like twice already. So 2, 4, 6, blah blah. So yeah, blocks until mine reward is half. It's 29,088 blocks left before the halving. Total number of blocks reward halving. So 2, yeah, like I said, so there's only been 2 block reward halving so far. Next year will be the 3rd one. So simple math, every 4 years. 2016 was the last one. 2012 was the first one. 2008, that's when it started. So yeah, approximate block generation time 10 minutes. Again, like I said, that's not perfect. Sometimes it's 7 minutes, sometimes 11 minutes, sometimes 8 minutes. But after every block is forced into the blockchain, the algorithm adjusts the difficulty level to get as close to this 10-minute block time, this program 10-minute block time as possible. It's 144. What's 144? Approximate blocks generated per day. We did that. So there's 6 10-minute block times. 6 10-minute block times per hour because of the 10 minutes. So we multiply 24 hours in a day, obviously, by 6, and you get 144. Whew, I could be a teacher. I don't want to be like no kid. No, I'm messing with you. I was going to make a joke, but it's not a good joke because Chicago teachers on strike right now. Difficulty is, how many? That's trillion. I mean zero. I mean commas. 1, 2, 3. That's trillion. 13 trillion. I think the difficulty is, skips my mind. Hash rate is 88.72 exahashes. That's how many. That's like equivalent to, I want to say ASICs, but everybody don't use ASICs. So that's how many times there are, lack of a better term, computers guessing a nonce to win the reward of forging the block on Bitcoin's blockchain. Wow, I talked a lot. So let's go to the chat, see what's going on in the chat. Let's see what's going on, Richard Dixon. How you doing today? Hope you're having a great day today. As remember, always remember, as you all come in, please hit that like button. We really do appreciate it. Also, comment, subscribe, and hit the notification bell. As always, yeah, this is our Thursday blockchain and cryptocurrency chat. I am your host, Food with Money. A link to my show, my channel, will be left in the description box. And also, 1, 2, 3, 4, 5. And also, I forgot what I was going to say. Let's see here. Anthony Law. All right, how you doing, Anthony Law? Richard Dixon, Mike V, how you doing today? Ty City, how you doing, Cashmatic? He said, Ty City said, you don't want to know why I think Bitmain fled to Texas. Yeah, and our show, I looked up, what's it? Rock. I can't remember the city. It's like a suburb of Austin. It said its population like 5,000. So Hmm. Good afternoon. Well, hello, Johnny Blaze. How you doing today? Dave Tao, how you doing? What certifications you need to go on blockchain develop? There's a number. I'll have to put some in the if anyone don't know, I'll have to put some in the, excuse me, I'm messing with my mic here, in the chat. All right, let's get back to the show. Let's get back to the show. Share screen, and we jump right into it. You know what? I deleted that block website. I said I was gonna leave it up. Okay. Anyway, dollar deposits on Binance US now have FDIC insurance. Hoorah! Binance US, the United States focused wing of major cryptocurrency exchange Binance, announced that its customers' dollar deposits are eligible for Federal Deposit Insurance Corporation or FDIC insurance coverage. In a blog post on October 18, Binance.US announced that the exchange holds its US dollar deposits in pooled custodial accounts at different banks that are insured by the FDIC, which is a United States government agency designed to protect consumers and the U.S. financial system. Binance US explained, and I do quote, the pool custodial accounts are maintained in a manner that provides access to pass through FDIC insurance coverage up to the depositor's coverage limit, which is currently $250,000. FDIC insurance coverage protects depositors against the risk of loss in the event that an FDIC insured bank fails. End quote. The FDIC was established in 1933 to promote confidence in the stability of U.S. financial systems and prevent the widespread closure of banks during the Great Depression. Myself, I think this is wonderful because now with Binance US, you can link your bank account just like you do with Coinbase. Link your bank account and you can put cash in there. So now it's important to know they're not saying total amount that you have in your account up to $250,000 because you have crypto in there. They're not saying your crypto. They're saying your cash deposits. Your cash deposits, because like they say, what they do is pool all cash deposits for Binance US holders, well, Binance US accounts. Whatever you have in your account, if it's 50, 1,000, whatever the total amount is, it gets pooled with all other Binance US accounts and distributed to all to FDIC insured banks across America. So that's what they're doing. They're not counting your crypto in that. They're counting your cash, fiat, US dollar deposits only. Dollars, not nothing else. Not GUSD, not BUSD, not true USD, dollars, hard dollars. 1, 2, 3, 4, 5. That, not stable coins. That's good in my opinion because see how Frank said another dip happens, your money's already in that account. FDIC insurance is the $250,000 is like that at all banks. They only insure in case of a bank fail, whatever's in your account up to $250,000. It doesn't it doesn't benefit people to have more than that in their account in one bank account because it's not insured. So if you making big money, you kind of well, not even kind of, you are what's the one I'm looking for here? It'll benefit you to invest, because if you got $1,000,000 in your account, then $750,000 is not insured. So it'll benefit you to have $250,000. Well, I keep saying a $250,000. Yeah, $250,000. Wow, okay. Wow, look at this heat map. Oh, so it don't want to come up now. There we go. Come on. Come on. You can do it. You can do it. There, you almost got it. Well, there you go. So down 0.04%. That in crypto is nothing. That in the stock market is nothing. Also, let's see here. Can we zoom? Can we zoom? We can zoom in, but not out. Okay, so yeah. Normally when the whole market is red, stable coins are up because people are trying to get out their positions into stable coins. What's this right here? Bitcoin, Coin Cash, boom, boom, boom. So yeah, BSV sucks. All right. Wow, what's going on? Okay, here we go. Xpring invests in. Wow, excuse me. Xpring invests in Swedish startup to build XRP Hardware Wallet firmware. Now this right here, wow. Ripple investment arm and tech incubator Xpring has invested in Swedish cryptocurrency self-custody startup Towo Labs to build hardware wallet firmware. Xpring announced the news in a blog post on October 16, stating that the startup plans to develop a new version of the XRP toolkit and hardware wallets firmware supporting all XRP ledger transaction types. It's like 20 ledger transaction types. I did not know that. As well as non-custodial web interface. In a parallel announcement, Total Labs said that the firmware will support signing cross-currency payments, escrow, orders, and trust lines, among other things. It will also enable users to prepare transactions from untrusted devices which means the hardware devices, what they're trying to say there, which is it could be untrusted devices, prior to auditing and signing them in a hardware wallet. Actually, no. Untrusted. In case of a hardware wallet, an untrusted device is like a computer you put it into. It's not your computer; it's like a public computer. That's an untrusted device. So they're saying that you can still interact with your hardware wallet via interact with this XRP web interface that they're building via your hardware wallet on an untrusted device. So what they're doing is they're going to build that for Ledger Nano S, Ledger Nano X, Trezor wallet, and it was another hardware wallet that I never heard of. But it's like being your own bank, literally. Now with crypto, people say, "Oh, be your own bank." Previously, it was to the extent of just hold your own money. Now with this, I can see you loaning your money out with interest, giving out loans, and doing a number of things that banks do. And I can see this actually enabling people to actually be their own bank holding XRP in a update, okay, in a hardware wallet. That's pretty cool. Xpring is, man, they are widening the use cases for Ripple, not Ripple, XRP. Wow, that's bright. Okay. Extreme caution. You know what? I'm going to leave this last because I'm going to rant on this one. I'm going to rant on it. Let me move that to the right. Trump at, you know what? Let's move that to the right too. that's 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 another one. All right. Opera becomes first major browser to enable direct Bitcoin payments. Web browser Opera now allows making payments with Bitcoin directly inside the browser. The company announced the news in a press release shared with Cointelegraph on October 21, detailing that Opera's 350 million users can now send and receive BTC directly from the browser, as well as use the cryptocurrency for purchasing goods and services on e-commerce websites. So you can shop with Bitcoin using the Opera browser. Look at that. Who's a fad now? Who's a fad now? Not, yeah, fad. Additionally, the browser now enables adding a Bitcoin and Tron card, wow, into the built-in crypto wallet to keep track of the cryptocurrency owned. Charles Hamill, head of crypto at Opera, commented on the new feature launch, quote, "We believe that opening our browser to more blockchains, including Bitcoin, is a logical next step to making our solution more relevant to anyone who has a Bitcoin crypto wallet and would like to do things with their cryptocurrencies beyond just keeping them in an account," end quote. The features were previously released in the beta version of the browser this summer, while the first cryptocurrency available for purchase through the browser was Ether in February. So when stuff like this happens, people that are pro crypto tend to navigate to those browsers. Like the browser I'm using now, the Brave browser, I'm using the Brave browser. I like it. Ad free. It gets right into it. You don't have to worry about all that junk playing in the background. Like on the Brave, not on the Brave, like on the Chrome browser, albeit they're releasing the update to calm that down. But my God, have you seen the RAM Chrome browser takes up? Golly. But I like Brave. It's pretty quick. So a lot of pro crypto people, they're gonna navigate to these browsers. Now it's not a lot of pro crypto people in the world, to prop up this browser to overtake, Chrome, but still, that's good news. That's actually good news. All right, let's get to some ranting here. Trump administrative Trump administration popped 2017 Bitcoin bubble. XCFTC chair says. My dog, J. Christopher Giancarlo. Ladies and gentlemen, the Trump administration acted to deflate the Bitcoin bubble of 2017 by allowing the introduction of futures products, a former official said Monday. Christopher Giancarlo, who left the U.S. Commodities Futures Trading Commission, or CFTC, at the end of his 5-year term as chairman in April, told CoinDesk in an interview, the quote, "One of the untold stories of the past few years is that the CFTC, the Treasury, the SEC, and the National Economic Council directed at the time director at the time, Gary Cohn, believed that the launch of Bitcoin futures will have the impact of popping the Bitcoin bubble," and it worked, end quote. So J. Christopher Giancarlo is not the chair of the CFTC right now. He left that position. His term was up. Heath Tarbert is the guy now, and he actually is the one that said recently that Ethereum is a commodity and that be looking out for Ethereum futures. Now, people are, fudding, not fudding, but saying because Bitcoin futures popped the bubble in 2017, what will Ethereum futures do? So, so this is proof. We got proof from a former chairman. He was chair of the CFTC, and cryptocurrencies in America is regulated by the CFTC. So that's why it's the CFTC saying this. In a speech at the Pantera Summit in San Francisco on Monday, Giancarlo elaborated further, saying Bitcoin's dramatic price run up in December 2017 was the first major bubble following the 2008 financial crisis. That's why the Trump administration acted in concert to address it in a pro-markets manner. He said, Bitcoin futures listed on the Chicago Mercantile Exchange, or CME, and the CBOE Futures Exchange, or CFE, were announced by the CFTC. There's a lot of alphabets there. I want to lose you all, were announced by the CFTC on December 1st, 2017, and went live on December 18. Bitcoin price peaked at nearly $20,000 one day earlier on December 17, before falling dramatically in subsequent weeks. That drop was rough. We saw a bubble building, and we thought the best way to address it was to allow the market to interact with it, Giancarlo told the crowd gathered at the Ritz-Carlton on Nob Hill. So, proof that the administration played with our souls. Proof. Stop that. Proof. Mm, mm, mm. They said we saw a bubble. So you can see a bubble brewing in Bitcoin, but you can't see a bubble brewing in your own markets, man. Leave our markets alone. But he essentially said that, this was the only crash that happened in this decade was the crypto crash of 2017. That's the only crash. So technically, you can say in the future when people say, "Oh, from 2010 to 2020 was the greatest bull run in America," and then people will say, "Well, technically, it had a crash. The crypto market crashed." So right now, people are not saying there was no market crash in this decade, but technically, as he said here, where is it at? Giancarlo elaborated further, saying Bitcoin's dramatic price run up in December 2017 was the first major bubble following the 2008 financial crisis. So technically, there was a crash in this decade. It was a crypto crash. So yeah, he wasn't ready. I don't know why I want to say that. Extreme caution. Binance CEO says new feature is not for crypto newbies. Let me read this. Binance is jacking up the leverage allowance on its futures platform to 125x. 125x on futures leverage. Whoa. And CEO Changpeng Zhao says new traders should be wary. The exchange officially launched its futures platform in September and subsequently rolled out the larger leverage options. Quote, traders are able to select any leverage from 125x to 1x, and larger positions will adjust to lower leverage allowed. Okay. At 125x leverage, a $100 USDT, that's Tether, collateral deposit on Binance futures will allow users to hold 12,500 USDT in Bitcoin. So basically, if you have $100 with 125x leverage on this is not margin, this is futures platforms. On a futures platform, if you have $100, you can trade you can put in a futures contract for as if you have $12,500, because as we know, Tether is tied to the dollar, quote unquote. This is his tweet. CZ says, use high leverage with extreme caution. Don't recommend it for new traders. Now, please heed this man's advice. Please heed his advice right here. Not every feature is for everyone. Again, not every feature is for everyone. Some features, while not liked by everyone, are in high demand only for small and selected groups. Please don't use features you don't like or need. As a platform, we have to provide choices to stay competitive. Zhao says institutional traders are flocking to Binance Futures because of its smooth taste and trading experience. The platform also plans to launch additional features in the last quarter of 2019. So when I first got into investing, I was a stock investor. I wasn't a trader. I was a stock investor. I invested into dividends, Coca-Cola, AT&T, blah, 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 Verizon. When I opened up my account at my brokerage firm, I was starting to buy stocks. And I put some money in, and I deposited some money in. I was buying stocks, And un momento. And as I was buying stocks, hold on, my cord here. I said to myself, wow, the money I'm depositing is getting me a lot of stocks. I kept buying stocks and I kept buying stocks. I'm like, there's a lot of stocks I'm buying. And I called the brokerage firm. I'm going to bring this up. And I said, it's a lot of stocks. And they told me that, well, your account is set up for margin. And I was new to investing. I said, what's margin? And they said, well, we front you money. I said, nope. That meant I owed them money. That was my first run into margin. I didn't know what I was doing. I didn't want no debt. What happens is when this market becomes a proper bull market, my definition of a proper bull market is when Bitcoin breaches its previous all-time high of $20,000, and when the administration don't mess with the crypto market. When Bitcoin breaches its previous all-time high, you will see on CNBC, MSNBC, Squawk Box, MSN, all these other alphabet channels. The magic words. Well, if you have put $1,000 into such and such, you could have such and such right now, especially if a crypto bull run coincides with a stock market correction. Now, if that happens, a lot of people are going to, want to make some money, and they're going to, have this thought in their head, well, I want to make money. I can trade. It don't seem hard. And what they'll do with what I guarantee you they're going to do this. What they're going to do is go to charts, trading. Is go to charts, and they're going to look at charts, and they're going to be like, well, it don't seem that hard. View.com. They're going to go to charts sites like TradingView, and they're going to come here, and they're going to type in BTC, and they're going to type in all this. They're going to click whatever until they find the correct BTC chart to look at. And then they're going to come here. I'm gonna use the bitmex. I'm not using everybody using the bitmex one. Where's it at? Bittrex. I'll do Coinbase, whatever. And they're gonna say, well, it doesn't seem that hard. But they're gonna look at past. Golly, that's bright. Past, man, look at the triangle level. They're gonna be like, well, it just goes up and down, up and down. I can time the market. And then they're gonna go to sites like Binance and do this 110x leverage, and they're gonna get wrecked. One of four things is gonna happen during another bull run. One thing, the first thing, people are gonna make money. Meaning people are gonna make a lot of money. People are gonna make a lot of money. And I define a lot of money as people are going to be in the positive. They're not gonna owe any. Oh, how about this? A lot of money is a definition of a lot of money is at least $100,000 or more. The second thing that's going to happen is people are going to make enough money to pay off debt. That is between $0 and $100,000, or how much debt people may have. People may have school fees. You never know. That's my definition. The third thing that's going to happen is people are going to make enough money to put a significant dent into the debt that they have. And the fourth thing that's going to happen is people are going to lose money because of, and I'm coining the term here, hyper over irrational exuberance, especially if a bull market in crypto coincides with a correction in the stock market. So that's one of four things going to happen. Remember back in 2017, people were taking out mortgages to invest in Bitcoin. Guess what's going to happen during the next time? It's just going to be worse, because the bull run, this next bull run, is going to be greater. You know, the only thing you're going to see is like a straight line up. So let's look at some numbers real quick, and we'll close this out. So a few numbers are going to be different. So what's going to be different? Market capitalization is going to be different. So Bitcoin inflation per day is going to be different. So right here, they got 13 million. And on this, what's the 13 million? 415,580. Oh, that's a silver sign. Bitcoin inflation, total blocks. What's going to be different? Something got to be different. Yeah. Oh man, market capitalization is different. I see it changing. Oh, market capitalization and Bitcoin inflation rate until next, because they got to do with the price. I see it's changing. Okay, so let's go look at the chat, see what's going on in the cheesy chat, and we'll close it out. So, how you doing, DE? How you doing today? Richard, this is my thoughts on Tron. I don't mess with Tron because Justin's son is too unstable. Anything he say can have a negative effect on Tron, and yeah. Let's see. Thai City says China has most of the mining. That's why they allow derivatives to be traded against Bitcoin. Now we have Bitmain in Texas. Yeah, that's a lot of mining in Texas. You know, the cheap electricity. Also, why the Bitcoin ETF keeps getting rejected. I am not looking for that Bitcoin ETF. It's just been rejected so many times. All right. Julian M says, Liddy. How you doing, Julian M? All right. Looks like Richard Dixon helped the veto out. All right. So, thank you all for tuning in. As always, hit that like button. We really do appreciate it. And with that said, we catch you all on the next one. I catch you all tomorrow on my channel at 9 a.m. Central Standard Time. On my channel, Food with Money. Links in the description. On an early morning crypto show, episode 49. So with that said, hope you all enjoyed the show, and I will catch you guys on the next one. I think it's another show after me, so yeah. Stay tuned. Peace.